All right, ladies and gentlemen, everything you need to know about blockchain technology. We're going to hit them with all kinds of questions. So if crypto's your thing, you're an investor, you got all kinds of questions about what's a scam and what's not, this is the one you're going to want to listen to. So let's get this one going. Here we go.
Shut up and sit down.
Look, a business can give you everything you want in life. Prestige, wealth, freedom. It can also take everything away from you. This show is for those who are willing to take that risk. These are the real life stories of entrepreneurs. But before we start, I have one small favor to ask. Please leave a comment. It can be advice, critiques, tips, feedback, or share this with someone because your engagement is the most valuable and most powerful form of social currency. So thank you, and welcome to another episode of Business Bros. All right, business bros out there. Today we got an extraordinary episode lined up for all you crypto enthusiasts and investors out there. Joining us is a remarkable guest who is the forefront of blockchain innovative Age of Autonomy. And we have the CEO of Tradecraft Capital on the show today. Today, we're going to bring decades of experience in technology, entrepreneurship, crypto investing, all to the forefront. So let's get ready to dive into the world of blockchain digital assets and the incredible transformation they're bringing to our financial systems, the economy, and society. So if you've ever been intrigued by a influencer or crypto scandals, then you're curious about the cryptocurrencies and the strategies that multinational corporations are adopting, that's a handful to even say, then just stay tuned because we got a great show for you guys today. Let's welcome to the show, Mr. James Diorio. A little bit of modification on the fly because we're missing a co-pilot, but it is what it is. James, thank you for coming on the show today.
It's a pleasure, man. Thank you for having me. It's a real treat to be here. And what an intro. I mean, I love that. Thank you.
Of course, man. Look, this crypto thing, man, I'm going to be honest with you. I only invest in things that I understand. And I don't understand this stuff. Like, I got a general idea of how it works, but I'm kind of scared because I lack knowledge, right? So I'm going to ask you the very first question. How'd you get into this space? What's your background in this space? And what do you tell people like me who just are nervous about this type of investment vehicle?
Yeah, it's a great question. It's the right question. It's the question that we tackle most often. So a lot of what we do is educate, and that's my business partner, Jake, and I, and apologies he wasn't able to make it here. I had a last minute issue come up, but we're here today. And it's a confusing space. It's a confusing space. So I'll tell you, my story is I'm an entrepreneur and I'm originally an engineer. So degree in computer science, College of Engineering, and I was a developer, then a business builder. Built 5 businesses, bought 2, sold 2. That's my background. And Jake approached me in 2016 and he said, Jim, you should go buy some Bitcoin. And I looked at it and I didn't get it. And I looked at it and I said, this is nuts. Jake, you're nuts. Good luck with your crazy crypto thing. And that's a true story. And I walked away. Now, I actually, so I had an exit in 2017. It was a software as a service turnaround and made the Inc. 5000 7 years in a row. Had a nice exit. And then I said to myself, maybe I'm nuts. Maybe I don't understand it. Maybe it's me. So I spent a year going everywhere I could to find out about it. I went around the world. So I went to Dubai. I went to Toronto. I went to Europe. I went to NorCal, SoCal, New York, everywhere I could go to a conference and learn and get my hands around. And I became convinced, really convinced that this technology was just going to change the world. And that's when I kind of dived in. So dove in, and Jake asked me to come on board and be his partner and build out a digital asset manager. And we're doing that. But through the course of it, we realized, gosh, if it's hard for, I'm an engineer, if it's hard for me to understand, it's got to be hard for people that don't have an engineering background to understand. And part of that is there's so much hype and there's so much conflation about it. I mean, you turn on any financial news channel and you see Bitcoin's mentioned 37 times a minute. And people that in it are afraid to be in it because they're afraid it's going to go down. People that aren't in it are afraid it's going to go up. and no one understands why they should be doing this. It's all FUD and FOMO. So that led us to the books. So here, shameless plug here. If you want to find out why, this is the book, Crypto Decrypted. So this just came out back in May, and it's a follow-up to Jake's first book, which talks about our thesis in the financial age we're in. I'll talk about that in a little bit. But nobody talks about why this stuff matters, right? Everyone's confused by it. So there's a couple of things. The first is we got to do a crowbar between crypto and blockchain. So crypto, right? They're two different things, right? And so if we break that apart, blockchain is the thing we're really interested in. Blockchain is a technology that's going to be transformative. So, and what is blockchain? You want me to go down to some basics for a second?
Yeah, let's break it down, because I think for most of us they are one and the same, and you're literally explaining how they're not. Yet we have a financial aspect of it, and then we have the actual security aspect of it. So I'm assuming we're gonna break that down.
Yeah, absolutely. So first, forget about the word cryptocurrency for a second. Just forget that. Cryptocurrency is not what we want to be thinking of. We want to be thinking of crypto assets. So first, let me talk about blockchain. What is blockchain? Blockchain is a specialized database. That's all it is. It's a specialized database where there's no one computer in charge. That's it. And it's got certain properties. So in this network of databases, right, all transactions written are permanent. So that's interesting in the digital world, because things digitally tend to be not permanent. And everyone can see every transaction. So we call that transparency. Permanent, we call immutability. Everyone seeing everything, we call that transparency, right? And then because every computer has a copy of it, every computer that's in the network, we call that distributed. So if one of them blows up, there's plenty of other copies, and no one computer is in charge. So that's all blockchain is. It's a new way to deal with data.
So it's essentially what you're describing here is it's our ability to know that the transaction we made, everybody can see. And we're stepping away from the idea of currency here, because the transaction could be a recorded document, deed, a transaction between two people. It could be almost anything.
It could be a podcast.
Could be a podcast. It's just that the way it's stored, rather than traditionally where we store it in one filing cabinet in one particular computer, now it's everywhere. So if I try to make a digital copy of my own and pass it off as a sale, there's records on multiple places that show that's not the way it happened.
Yep. Yeah. And look, once a transaction is written, it's permanent, right? That's new and novel. Doesn't mean you can't do a new transaction. Right. So if I send you a file or a Bitcoin or a token and it's confirmed and you've got it, you've got it. You can send it somewhere else, but that's different. So that's the first distinction. That's blockchain. Blockchain is a technology. So what's crypto? Crypto is a digital asset related to a blockchain. So it could be money. Bitcoin is money. Bitcoin is a money use case of blockchain. It could be a right to do business. So Ethereum's not money. When you have Ether is a token that allows you to do a transaction on the Ethereum network. Now, why do I need that? Right? Ethereum is a platform that allows you to build more blockchains, allows you to build decentralized applications. Think of it as a Lego kit for building blockchains and blockchain-like things. Currently, if you want to use software, you've got to get a license. You know, that's if I want to use whatever, CRM or some software as a service, I got to get a license. But if blockchain, it's not like that. There's no licenses. It's just technology. So how do you use it? Well, they say, hey, if you've got a little bit of this token, right, this is the token that we use to get transactions done. So that's what Ethereum is, right? It's a utility. Tokens could represent rights for governance. If you've got a governance token, you've got 5% of them, you've got 5% of the voting rights on that blockchain. It could also represent a digital good, as you mentioned. It could represent art, the NFT craze, sure. But NFTs are so much more than that. It could represent data or a medical record or the deed to a house or anything that you can store as data. So think of tokens, coins and tokens is just the ability to have transactable elements inside of a blockchain. And they could be a lot of different things. And by the way, that's why the government's having such a hard time figuring out what to do with it, because we've never seen anything like this before.
So theoretically, people can start their own blockchains and then have their own tokens to be able to build upon that individual blockchain. And I've seen this over and over again, different blockchains for licensing music, different blockchains for a lot of different product services. You talked about the NFT craze. And so everybody seems to have a token. And I think this is where that idea of currency and scam start to fall into place, the misconception that lies in that space.
Yeah. Look, there's 10,000 crypto assets out there, right? And most of them are nonsense. I'm just going to say it. So in the book, we back into that through math that, roughly 12.5% are viable. That's because that's what we could do with math. Between you and me, I think the universe is probably more like 400 or 500 out of the 10,000. It's a very small amount, very, very small amount. So with that, how do you weed out what's right? How do you read out what's valuable? Well, anyone can make a blockchain. That's part of the problem. Now, we've got some really good technologies out there that are competing, and they're going to do great things. Then we've got a lot of things that are just copies. So let's talk about Bitcoin for a second. Bitcoin is a money use case. So Bitcoin is money. It's frankly the only one that Jake and I care about. There's a lot of copies of it. Litecoin, Monero, Digibyte, Dash. There's lots of things trying to be money, right? Bitcoin SV, Bitcoin Cash. They're saying, hey, we can build a better version of money. From our standpoint, Bitcoin's got a huge head start, right? It's been around for 13 years and change. It's the one. So just because it exists doesn't mean it's viable. Now, here's the challenge. Let's look at Dogecoin. 10,000 new Doge are minted every minute. What do you know that you keep putting 10,000 new every minute in the marketplace that eventually grows in value?
Nothing. Look at the US dollar.
Yeah, that's a whole other conversation. That'll be a fun one too. So you got to look at it like that. So when people look at these assets, you can look at these short-term things. You can make money on anything, right? The whole GameStop thing showed you can make money on anything. But just because you can make money on it doesn't mean it has viability long term. And what we look at is we look at the blockchains and the assets that are going to exist long term. That's important to us, and that's what we look at. And you want to talk about safer investing. That's one of the ways to start, because a lot of the stuff out there we believe will go to zero. And that's not because it's all fraud. If you remember back in the internet, most of those projects didn't make it either. So we're at the midst of this new technological revolution.
Let me ask you, because I've heard that even though Bitcoin is the older one, it's more stable, it's not really designed well for normal day-to-day currency transactions. It's more like a place, I kind of, the way I always think about Bitcoin myself is it's kind of like gold. Like I can hold gold, it can increase in value, it can decrease in value, but at the same time, I can't really go to the liquor store and buy like a bag of chips with gold coins, right? Like it doesn't, unless it's $1, right? It's not really gold, but you get what I'm saying? Like, so what about that kind of aspect to it? The actual exchangeability or the liquid asset that Bitcoin is, can I use it that way? Is it designed that way? Or are we just kind of holding it like gold?
Great question. So yes, it is designed that way. And I'm going to take a slight detour and then come back, because what I want to share with you is something to really help explain how these things work. You talked about not understanding it. Most books out there and most folks out there talking about how do I make money with this stuff. We want people to understand why this stuff is valuable, because if they understand why it's valuable, then they can make better choices. And that's what we talk about in Crypto Decrypted. And the why, and this is the problem that was solved. Have you heard of the Byzantine generals problem? Does that ring any bells?
No.
Okay. It's got a scary name. Even the name, right? Byzantine means, wow, I'll never be able to understand it. It's confusing and convoluted. It's a terrible name. Blockchain solved one of the top 10 computer science problems of all time. It's called the Byzantine generals problem, right? Forget about the name for a second. What is it? The problem is I've got 10 generals. I'm going to attack a city. If we do it together, we win. If we don't do it together, we lose. Sounds simple, right?
Yeah.
Here's the issue. No one's in charge.
Oh.
So the question is, how do I get something done in the digital world without having a central counterparty, something I got to go through that filters everything and directs everybody? Now, why is that important? It's important because that's how we operate in the physical world. So if we were sitting next to each other, right, I could, let's see here, I could go ahead and I could hand you a card. I could hand you a $20 bill. So if I've got a $20 bill, it's mine. I pull it out of my pocket. I give it to you. You put it in your pocket. It's yours. And we're done.
Mm-hmm.
We didn't have to ask a company, the bank, the government, a relative, a friend. We just did it. You and I can do that today. That was never possible in the digital world. In the digital world, you always had to go through a bank or a company like a PayPal, or even a video game says whether you've got access to that pickaxe or gun or not, right? So it's always been a central entity. Blockchain solved that problem, and it allows us now to have some things. It allows us to have digital assets that we can control, digital assets that we can transfer, and we can transfer it freely. And more than that, if they're unique, we can prove that they're unique. You could never prove anything digital was unique, right? The internet was awesome. It opened up information, but I like that piece of art. Right click, I've got it on my desktop. Done.
Mm-hmm.
Right? Oh, look at that document. Right click, done. I've got it. So now we have the ability to replicate the physical world in the digital world. This is, and I'm going to get back to the Bitcoin question in a second, but that's why this is so exciting. And that's what we want people to understand, because just like the internet changed everything, and by the way, not everyone believed in the internet.
Yeah.
Right.
Sure.
I mean, in 98, Nobel Prize winning economist Paul Krugman said by 2005, the impact of the internet will be no greater than that of the fax machine.
Well,
right.
yes, some people were wrong.
Nobel Prize winning economist. So, so this is happening, whether we like it or not, whether we want to participate or not. So the question isn't quick, how do I get rich with this? It's first, let's understand what's happening. So this is happening today. So I want to leave the listeners here with this, because we think it's critical. This is, by the way, why Dubai is sinking billions of dollars into the metaverse. Because they think if you and I could have this conversation and feel like we were in the same room, around the same table, and engaging with each other that way, that would be exciting. Right? We're better in person, no?
Yes. Even if we're Sims in person, right?
Yeah.
But it doesn't really matter. The fact is, I'm here, you're there, we're talking to each other. And if I want something that you have, we have a means to exchange it.
Correct.
Now, this is where you start getting into some weird concerns, because on a political level, you're completely decentralized. There's nobody in charge, and a government likes to be the one who's in charge. So they're getting hit. A lot of these different places are becoming quote unquote fraudulent when they become insolvent. But a lot of it is also going to come from above with regulation. How do you regulate something that is deregulated?
Well, again, great question. So blockchain itself, Bitcoin doesn't need to be regulated as a technology. The technology is self-regulating. Now, how do we allow people in and out and all that? That's where humans come in, and that's where it gets kind of ugly and messy. You asked about Bitcoin as a means of exchange. It's absolutely a means of exchange, right? We can use it. If I've got a phone and you've got a phone or a computer, right? I can send you money right now. You'll have it in minutes. It'll cost pennies for the transfer. Think of the unbanked in the world. 24% of the world is unbanked. They now have access to money and exchange. And by the way, it's part of the reason why we're seeing adoption in other parts of the world before the West, because the West is, it pretty much works. We can get bank accounts, right? We can get loans, we can do business. So as a means of exchange, it was designed for that. Now, will that be its ultimate fulfillment? You talked about gold, and Jake and I think it's really going to be more like a reserve asset. It'll be more like gold of the digital space, and it'll be valuable and precious. And why is it precious? Because it's rare. There's only 21 million of them that'll ever be created. ever. It's accepted. It wasn't accepted 10 years ago, back to the Bitcoin pizza, 10,000 Bitcoins to buy a couple of pizzas. No one knew if it would be worth anything. So now we've got acceptance. We've got seminal investors. We've got adoption. We've got companies looking at it. We've got companies that will accept payment for it. So we're getting there. But everything evolves with time. Ultimately, why do we say Bitcoin's the only money we believe in? Because if you and I go out to dinner and I want to send you some crypto, we're going to split the bill. I'll probably send you stablecoin. I'll probably send you something like USDC or something that you can exchange for dollars. Because although dollars devalue over time, it's not going to devalue in the hour you take it and exchange it for cash if that's what you want to do. So we think stable coins will solve that problem. And again, that's a whole other conversation, but stable coins will allow us to exchange value. Bitcoin will be a store of value. It'll be a reserve asset, and it will still be tradable and exchangeable. I think we'll see some adoption, but I think over time it'll revert to something that's more stable.
Okay. So let me
about regulation, but I'm trying to get everything answered that you're asking me.
No, yeah. Well, I mean, it's kind of hard to answer the regulation question. It's tough because we just don't exactly know, right? We have an idea of what governments have done in the past, but then I like actually how you phrased it. Like the exchange is already done; it's already taken care of. It's the access to these things where it makes a big difference. And so I wanted to kind of harp on the access. Like I know that there's value in Bitcoin and Ethereum. So I've been almost dollar cost averaging buying some of that for the last couple of years, right? Of both, just kind of buying every month a little bit here and there. And I literally use Robinhood because that was the first one. I was like, oh, okay, this is interesting. That's the only thing I do on there. That's the only transactions. Am I wrong to have access that way? Should I be accessing it some other way? Like, I'm sure there are a ton of people who are doing the same thing, but like most people, I'm making a minuscule investment where if it's gone, it's not a big deal. But if I win, it's cool. It's kind of a
Right.
Vegas win.
Right. And that's great. Yeah. And that's a great way to look at it. There's kind of a rule of thumb in the investor community is that, there's some number greater than zero, right? And less than 10% of your whole portfolio, but maybe less than 5. It could be just 1 or 2 points, some number. And by the way, I have to say, this is not investment advice. Please do your own homework. You've got to go do your own homework. Do not this, this is informational and educational. But to what you said, if you make a small investment and it goes to 0 and it's a non-impactful part of your net worth, then you're not hit. But if it explodes, you're in great shape. The problem is that things get so hypey because people have had these unbelievable gains. People think, and I thought it when I came in to this space, that everything will go that way. And that's why we spend so much time understanding the technology. From a regulation standpoint, we need regulation, and we need good regulation. Regulation by enforcement is hard because it's making up the rules as they go, which is why the Coinbase case, the SEC suing Coinbase, is so seminal right now. I'm actually in the process of writing an op-ed called, thank goodness the SEC is suing Coinbase. Why would I say that? Right? Because now the swords are out. We know what the game is. It's been kind of this area of vagueness, and Coinbase is going, can we do this? Can we do that? Can we do this? Can we do this? We'd like some advice. Can you give us some advice? We think we're doing things right. You let us go public. We think that this is doing correct. Can you give us some advice? No advice. And then they sued them. So now, okay, swords are drawn and we can have some resolution to it, right? And this case is about, are these things securities or not? And the SEC thinks almost everything is a security, right? CFTC, wants things to be commodities. We've got 2 agencies fighting now over who gets to parent the kids. And by the way, in the rest of the world, they're going for it. Hong Kong is embracing. Regulatory friendly. Japan, Singapore, Dubai, even Europe has passed the MiCA bill, which talks about regulation for stablecoins, among other things. So we need to get this figured out in the US, or the technology is just going to go overseas. Coinbase has already looked at going overseas, A to Z, right? Huge fund going overseas. So we need to be careful there. So we need some regulation because that's going to make it safe for the institutional money to come in. Right. And mostly it's the on-ramps. Look, FTX freaked everybody out. FTX was just fraud. So we've now got our Madoff out of the way. Okay, thank God that's happened now. So, but that's fraud. Now, it was in this space, not great for the space, but that was, look, taking customer money, loaning it to another company, loaning it to himself. That's not cool. You can't do that with other people's money. That's not what your role is as a fiduciary. So, that's that. But, so we need guidelines on how to interact with this technology. And that's where I think the regulation is going to come in, to create clear guidelines. And also, look, the industry itself hasn't done the greatest job, right? So, we need to follow basic common sense things, right? We need to actually operate, if we're a custodian, like a custodian. We need to set up some firewalls. We need to do some basic things. There's basic rules out there that we can follow. And I think we'll find the middle ground. I think it'll happen. Pendulums swing, then they swing back, then they find their way into the middle. And I think we had a swing one way and then a big swing the other way, which we're in right now. And I think it'll center back to the middle.
Do you think I mean, earlier you said, you believe in Bitcoin like gold. And I feel like I've heard this before somewhere where they said gold is God's currency. It's made, it's made here on Earth. It's just part of what we find. And Bitcoin is man's made currency. Like this is our own man-made gold. Do you feel like governments, if we decided to believe in a particular currency more than the dollar, more than the yen, more than whatever, the pound, whatever, do you think governments kind of fear that thought process of us just going, we don't need your central currency anymore. We're going to go with this particular currency?
Absolutely. I think governments are very concerned about that. That's why they're looking at creating their own digital currencies, a digital dollar. Right. So, look, I think we can have a world where everything does exist, where, I don't necessarily think one is going to supplant the other. Right. There's value in Bitcoin, just like there's value in gold, and you have a different purpose for that. The dollar is in an interesting place. Right. The U.S. has weaponized the dollar. The U.S. has shown the world that, we can use it to punish you if we don't like what you're doing. And sometimes that's good. Sometimes we need sanctions. Sometimes people are doing things that aren't good for the world. But the East is kind of tired of it. So we think what's probably going to happen is not that we're going to lose the dollar as the world reserve as a world reserve currency. We'll lose the dollar as the world reserve currency. We'll have a Western reserve, we'll have an Eastern reserve, and hopefully Bitcoin will be in the middle to keep everyone honest. But it's one of the concerns, because when you have something like a Bitcoin that can be exchanged freely and is not really managed by the US government or any government, that's an interesting thing. Right. So we're still mid-game on a lot of the stuff that needs to get it sorted out. But I will tell you, just like gold, Bitcoin models a lot of the principles of gold. And this was, by the way, I mentioned the second book. The first book that Jake wrote, it's a little thicker. It's called Crypto Asset Investing in the Age of Autonomy. It talks about the history of money. It talks about how we got here. It talks about why there's value to it. So if you're interested in this conversation of how it fits in with money, I encourage you to pick up that book as well. But here's the thing that people are missing. The conversation always reverts back to money. Let's talk about technology for a second. We believe we're entering this new financial age. So we're exiting the information age. We're entering what we call the age of autonomy. It's based on 100 years of of economic theory. And it says, look, all long wave economic cycles are based on revolutionary technologies. What does that mean? Oil, steel, electricity, the internet. These are technologies that changed the world, and those that got in safely did really well, right? So we're in a new age, and that age is blockchain, but it's not just blockchain. It's blockchain as it relates to AI, robotics, and IoT. That's what we call the age of autonomy. The Internet of Things is gathering sensor data at a staggering amount. AI turns that data into knowledge, as ChatGPT showed us and scared the bejesus out of us. Mm-hmm. And then you've got robotics, gives you a self-driving car. I'm in Austin, Texas. I can order a cruise. A cruise is an Uber without a driver. It'll come and pick you up with no driver. That's here today. Why blockchain is valuable as a technology is because now I can conduct capital transactions without human intervention. So I can do peer-to-peer capital transactions without human intervention at the speed of this other technology. So it's critical. So we believe we're going from an age of self-driving cars to self-driving businesses. So as entrepreneurs that are listening to this podcast, you got to look at this. This is where things are going. It's going very, very quickly, right? And we want people to look at this that way and see how these things come together, right? And again, it always devolves down to money because we all get crazy over money. But it's the technology, that's the thing, and it's how the technology is going to impact everyone. Imagine, let's build a business. You want to build a business?
Sure.
Okay, let's build a chocolate company because I love chocolate.
Chocolate is good.
So, right? So how do we build a business? We can look at supply, we can look at demand, we can look at our marketing.
Yep.
Right? Our competitors. We can look at our OpEx and our CapEx. That's how we build a business today, right? So what happens if I'm building a business in the future and I get my cacao from, let's say I get it from Ghana. What happens if I've got an AI running looking at geopolitical conditions in Ghana and it sees there's going to be a problem and it can execute a smart contract 5 minutes before my competitors know anything is going to happen?
It's called a competitive advantage. That's exactly what you're looking for in business.
That's exactly what it is. And in fact, what Jake would say is autonomy is the ultimate competitive advantage. And businesses that do not have autonomous operations will not be able to compete with those that do. So, look, I'm simple in my view on things, mostly simple. Businesses that provide value will grow in value. Things that provide value will grow in value over time. Right? I encourage people not to think of this as a get-rich-quick thing, but a get-rich-slow by participating in where this technology is going. And understanding how it's going to integrate with the world and touch everyone is critical. Does that make sense?
No, it totally does. It totally does. And I feel like, we're 30 minutes in and we've barely scratched the surface on this. So I want to make sure, as we're getting low on time here, you've mentioned both books. I got your website, readcryptodecrypted.com, scrolling across the bottom. If people wanted to reach out, they're like, yes, I need to learn more about crypto. I need to learn more about the blockchain technology. I'm definitely interested. How do people get a hold of one of those books? And what are they going to find when they go to that website?
So if you go to readcryptodecrypted.com, you'll have, LinkedIns and Twitters for both Jake and I, and you can get information on the books. You can also go obviously to Amazon, Barnes and Noble, independent booksellers, anywhere you can buy a book, you can buy these books. By the way, for all the people that aren't sure about crypto, everyone thought Bezos was nuts when he said, I'm going to sell books on the internet. Right. And they said, well, I could just walk down to Walden Books or B. Dalton for those that remember those. Right. Well, we all know how that turned out. Right. So, this is there. So that's how you find it. And, we got time for one more piece. I think the listeners will like.
Yeah. When you're bringing value, just keep bringing value, right? It'll grow over time.
I'll go really quick here. I want people to think about things, and Jake and I have been talking about this a lot lately, right? The thing about these conversation crypto assets is I want you to have the conversation of everyone talks about money. Money's financial capital. Getting stuff done, that's production capital, right? So what we're in the era of is now looking at how do we build two-sided marketplaces? And we can do that now with crypto assets. Think of an Uber without the company Uber. I've got drivers, I've got customers, and I can get them working together, right? And there's different assets that'll do it. Curve does this for creating yield on stable coins, but it goes ahead and does that without having this central entity calling all the shots, renders a token. And by the way, none of these are recommendations. These are examples, create two-sided marketplaces for computing power. So what we've got is we've got the ability now to create things and have them operate without this concept of a company. Just think about it for a second, Uber without an Uber in the middle and drivers and riders working together, right? And being matched up.
That's kind of scary, actually.
It's scary
because it's amazing, because it's actually possible, right? To put these two things together. The question is always the reason why the company's in the middle is because they brought the idea to life, right? That's the middleman always involved. And you're describing it coming to fruition without the human aspect developing the middle piece, right? Like that's kind of creepy, but cool.
Yeah. Well, what it does is it keeps everyone honest. When we look at Celsius, right? Celsius allowed you to, and I know a lot of people that got burned in Celsius, right? It allows you to, you could take out loans, you could generate yield, right? But it was a centralized entity, and it turned out that they had a lot of their own tokens on the balance sheet, and they were a little inflated. And the example is, look, if I'm a farmer and I've got a bunch of tractors, right? And I put on my balance sheet and say they're all brand new and they're 50 years old, and I take, that's not good. That's not really representing my company properly. But while Celsius was imploding, all of the decentralized finance contracts, what's that? It's just software that says, hi, you've got some collateral. I'll lend it to you at 50% LTV. Or you've got some collateral, you can go ahead and use it and produce some yield on that. And that's just software doing it. And here's the thing. We're not good at trusting software with our money yet. But if it's a sound protocol and you see how it's operating and it's transparent, right? It's not going to change its mind halfway through. It's not going to change the rules of the game halfway through, right? And that's really important. So, we start to get these, again, it's another example of a two-sided marketplace. And, the problem with humans is that we're human.
Yeah. Tell me about it. We make all kinds of mistakes. So, ladies and gentlemen, look, again, just a reminder, this is an investment advice. But at the end of the day, if you're going to invest in something, it's best that you actually understand how it all works. And what James is describing today is literally all the little fundamental stuff so you understand how this bigger picture actually operates. So that when you do decide to finally go make an investment in something that is just taking over the world, you understand how these things work. Plus, you're not going to feel so dumb at that party when they're talking about stuff. You're actually going to have some 2 cents to lay into that conversation as well. So James and Jake, which is not on the show, but Jake, hope you feel better. We got readcryptodecrypted.com. Readcryptodecrypted.com is their website. You can pick up both of their books there, right, James? Both books are there?
Yeah, you should be able to get both books on there.
Perfect. So Get your education, ladies and gentlemen. Learn a little bit more. The more you know, the more power you have in making a more informed decision. Because at the end of the day, look, the hardest thing about investing is sleeping at night and feeling like you made a good decision. And the only way you're going to do that is by understanding how these things work. So one more time, it is readcryptodecrypted.com, readcryptodecrypted.com. James, thank you very much for coming on the program today. Ladies and gentlemen, we'll catch you guys on the next one. Peace. And we're out.
It's over. Go home.
Is your business in need of marketing? Try starting a podcast, but not just any podcast. Podcast like a pro. We can show you how to take your business from being invisible to becoming a brand people trust. Go to www.businessbros.biz